Something just happened to the US economy that is going to be really bad. Well, it did not just happen right now, it has happened a long time ago, but it just gradually gets worse and worse. And now the effects are really showing out to the point where the effects are showing in real life. And this is going to be really bad for the US economy in the long run because the US now cannot survive without using debts. Let me explain what it means in 5 simple points. And now to my first point, which is interest payment is now America's biggest bill. Let me explain. America right now has a debt of about well over $36 trillion and still counting. And as bad as that sounds, it is worse because they are spending most of their money throughout the entire year just on paying the interest of these debts. So they're not even actually paying off the debts, they're just paying the interest of the debts, and it's already more than the national defense. What this means is basically you use your credit card so much to the point where you just don't buy insurance. You can't pay enough money for your usual insurance. You have to buy a smaller package insurance for your entire family, for example, because you have to pay up so much interest from your credit card. And when this becomes the biggest bill, everything in the country has to be sacrificed. Education, infrastructure, healthcare, everything. National defense is already the second biggest expenses the US have in a single year, and it is the one they spend most on is interest. And the worst part about this is that it's just getting started and it's still growing, and America can do nothing about it because they literally use debts to just survive. And now to my second point, which is the bond market is starting to crack. So the CEO of JP Morgan Chase has just said that the bond market is starting to crack and we're starting to see signs of it, and it's a fact. So 50% of Japan's long-term bonds has just lost its value. And it may sound like nothing just happened, like that's just numbers. And what does Japan have to do with it? Maybe it's just a small thing. No. Japan is one of the biggest economies in the world and one of the biggest investor in US bonds. What this means is that if that happened and investors are losing faith in US bonds, then everything from the global finance will be affected. Interest rates would spike, and interest rate would spike because US would desperately need people to invest, which if they make the interest rates higher means that the debt would also increase. I mean, the interest they have to pay for the debts will also increase, first of all. Second of all, crashes will happen inside the market because of the uncertainty from such a globally reliable country, and an economy suddenly just has a weakness. The entire uncertainty would cause a huge crash. And more than that, mortgages and retirement savings will be affected too because the US government takes a lot of their investing and put it in bonds as well. What this means is that how they take care of the retirement, the pension funds is also based on the money that is in the bonds. And mortgages, well, interest rate would just spike, and then it would be just really hard for the entire US economy to adapt to it. So right now, US is in a really bad situation, especially since we've been talking about the US having a debt problem for so long, and then them increasing the debt ceiling consistently. And now we've reached a point where the debt ceiling is actually taking effect and cracking. So that's the situation that US is in right now. And now to my third point, which is America's debts are structural, not temporary. What this means is basically, in a healthy economy, normally the deficit of spending is negative. You don't spend more than what you earn. However, when the US is having a stable and solid economy, the spending deficit is still way over 6%. What that means is basically when you are having a wage increase, you're still using your credit card like crazy to the point where you cannot pay back your debts at all. That's insane. What this means is basically the US literally cannot function without debts nowadays. It's like when you use so much of your credit card that you must get another credit card to pay off your first credit card. That's the situation you're in. And you know how hard it is to get out of it when you're in a private situation where you're using the credit card yourself, right? Just imagine that in a national scale and one of the biggest economies in the world. And you have to function like that consistently. If not, your nation cannot function at all. And that's how bad it is. So government spending will keep increasing and tax revenue cannot keep up at all, because which politician is gonna keep increasing the tax to the point where everyone's gonna be absolutely mad? And this is the idea of cutting spendings from government is kind of politically impossible. You know, Elon tried and he failed to even hit his own target, and now he's already okay. The argument with Trump is a completely different thing, but it's a different topic from right now. But he failed to even hit his target of cutting back $1 trillion in spending, and basically without him, no actions are even taken on this. So the cutting back of revenue is so impossible right now. And this structure is not just a recession fix. It is not just fixing an economic crisis. It is structural. It is there to stay, because the US literally cannot survive without doing this anymore. So it is really bad. This would make them lose a lot of things in the long term, including being one of the strongest economies in the entire world. And now to my fourth point, which is people are fleeing bonds for hard assets. So what this means is basically people are losing trust in bonds and they are slipping away and they are not buying bonds and they are going for hard assets, example, Bitcoin, gold, silver, and real estate and all these, because they don't want assets that easily get affected by things like inflation and recession, and when their money are fluctuating, they don't want it to be the value to be easily affected. Previously, bonds was the ideal way to do this because bonds give you interest and they're very stable. However, people are losing trust in it already, and then they don't believe in the bonds itself, so they are shifting their money away from it because they believe that bonds now will be disturbed by all these economic situations, which they don't like. Plus, the real interest rate from the US bonds nowadays, real interest rates basically saying the interest that they get from the bonds after minusing inflation is either low or negative. So they don't want to be holding something that would make them lose purchasing power. They want to hold a value that would be able to maintain the value of their money in the long term. So basically what happens is basically bonds are going to lose investors and people are going to shift to hard assets. And if the US is desperate enough, they will increase the interest rates to make these people come back to invest in bonds, plus the additional risk of investing in bonds because they don't trust it anymore. What this means is more interest, and more interest, like I've explained just now, will be bad for the US. And now to my fifth point, which is Social Security is sinking and nobody is doing anything about it. So the Social Security fund is bleeding out. Thanks to aging population, the already lacking workforce are going to have more people that comes into retirement, and what this is going to do is that the government have to increase the amount of pension they have to give them, they have to pay, and this is going to affect them even a lot because of their ever-growing debts. It's really bad. Well, they do have a few options, honestly. Increase the tax revenue, or cut on benefits, or borrow more. Well, which one do you think they'll choose? First of all, increasing tax revenue is basically increasing the tax of the nation, and honestly, politicians just really do not like to use this option a lot. Even though they don't like to use it a lot because of Two reasons. First of all, the citizens are going to really hate it, and second of all is because when it comes close to elections, they just really don't want to lose. Second of all is benefits. It's really hard to cut the national benefits on for the people when the economy is already suffering this much for them. Like, just look at the people trying to buy eggs. Well, even though the third option, borrowing, is generally the worst one out of the three because it could literally destroy the nation, it is also the one that gives them instant gratification for what they want and is the fastest solution consistently. So that's the one that they keep choosing. And this is going to affect them a lot in terms of the weight of the debts they have to carry. And eventually they will hit its limit. And this is not just going to affect the retirees, it's going to affect the global economy as a whole. From higher taxes, fewer services, to lost trust in the bonds or whatsoever, and market will crash, interest rates will spike, everything will be disrupted because such a strong economy is starting to crack. So that's the situation US is in. And now to my conclusion. We're basically living in a financial illusion. A lot of people still have the idea that the US economy is doing pretty good, inflation is coming down, everything's unemployment rate is at a stable level, everything's great. No, actually everything is horrible with the ever rising debts in the US, and this will not just affect the US. Even though US will be affected the most, the entire world will feel it because bonds is not just some corner of the Wall Street, it's the center of everything. It is the center of the financial system. And if it breaks, everything will break with it. Banks, pension, global trade, even currencies. And worst of all for America is the currency because they're the strongest currency in the world and they're the biggest reserve currency in the world. And if they lose this bond trust from people, they might cease being the biggest reserve currency in the entire world, and that will cost them a lot in global trade and so on. And this would create a huge wave effect on the entire world. But it is not just about, but in this video, we're not just going to talk about the worst things that's going to come. It's more about awareness for my audience, for you guys. It's more about awareness. Because of this thing happening, what are you going to do about it? Perhaps move it to hard assets like I've said just now, or you think you have a better solution on something else. Please comment down below if you do, and that will be it for this video, and I hope you like this video. I hope you like and subscribe. I hope to see you in the next one as well. Bye.